Good morning. Are we set now?
Yep, I believe
Excellent.
so.
Yeah. First couple of times a little shaky because you never know what the hell's going on. And you never know what's happening with Zoom.
Yeah.
Because you think it's set and then all of a sudden they have updates that they have to download now.
Yeah.
Get started. So we're here now. Do you have your Trade Navigator up?
Trade Navigator, I do.
Good. All right. So it's our first call. What's on your mind?
So the reason I wanted to sign up for the laser coaching is I'm at the point where I've gone through the course a couple times and I've done my back testing on corn and on the 30-year treasury bonds. And I've had the two bonus calls. I've had some questions which I did get answered through those calls. And I'm at the point where I'm ready to start my forward testing and and then hopefully quickly transition into live trading. I'm kind of targeting a retirement date for myself of no later than the end of September of 23.
All
So
right.
I'd like to be confident enough and comfortable enough with the system by that point that I'm comfortable taking that step. So I just wanted to have a little extra communication with you in case I did have questions moving forward, and if I wanted to just run certain decisions that I made or didn't make by you to see if I'm thinking straight, and just things like that. I just wanted to kind of accelerate my progress so that I can make my targeted date. So
Good. All right. That's all believable. I don't see a problem with any of that stuff.
okay.
Okay. So you had some questions answered, which meant you had some questions that were unanswered.
Well, I guess I kind of still am a little unsure of whether I'm setting the swing highs and lows correctly, the intermediates versus the short terms versus the longer term swing highs and lows, if I'm interpreting those correctly, and if I'm looking at my entries properly. As far as one of the questions I had was, for instance, on the bonds, there was a real long stretch of a nice downtrend, and it didn't have crossovers, so I was leery of getting in without a crossover signal, but it was consistent. I could have taken a lot of trades there, but I didn't because I was just sticking to the indicators and looking for a crossover. But I noticed that you had taken several trades during that trend, and obviously you've been doing this for many years, and you know the commodity very well, and you know how it reacts, and so I just need to get to that point, I guess, where I'm that comfortable taking
Okay.
a trade.
Well, let's see if we can't get you there. And it's not that difficult. It really isn't. You said you have your trade nav up. Why don't you open it up, share your screen?
Okay.
We can go through things.
See if I can figure out how to share the screen here.
That's always a big joy.
Yeah.
I'm not a big proponent of Zoom, but it happens to work. But it does all sorts of things, and I don't know how they all work. But
Yeah.
so far, we can get a call. I can record the call. I can generally share a screen, let somebody else share a screen. That's about as far as it goes.
Yeah.
It does other things. I don't know what it does, but it does other things. But that's close enough for me.
Yeah.
It's like Trade Navigator, it does all sorts of things, but I don't need any of that stuff.
Yeah.
Okay. Okay, that's your screen.
Yeah.
Okay.
So that's kind of the long downtrend I was talking about, that I didn't really take any trades in this range in here, which I see there could have been a lot of good trades taken in there.
Okay. Um, First thing, you've got the indicators downloaded, which is good. You only have profit target one up, which is also good. Okay. The thing that struck me immediately as soon as you open up your screen was that you got too much on the screen.
Okay.
Drop this out to maybe 4 months tops.
Okay.
So you can do that now. Right in there is happy.
Okay.
Okay. That way you can see what's going on.
Okay.
You've been with me for a while. Um, you've done 2 calls, and I think we've talked about the chart before.
Yeah.
And you've reviewed the 2 videos in the bonus section.
Yes,
Okay. And you've probably reviewed some discussions in the alumni group by now.
I have. Yeah.
Good. All right. Um, New traders are wrapped up in the indicators. In all our discussions, in all the videos, and all the discussions anywhere, okay, how much emphasis do I put on the indicators?
Not as much as the price.
Not as much as the price. Yeah. The price is what controls everything.
Yeah.
Indicators are always after the fact. I don't care how good they are, but you went through the course and you saw there were, God knows, some ridiculous number of indicators that I cited. There's more. I just cited some of them.
Yeah.
When they came out, that was going to be the holy grail, like the godsend. I have this one indicator that's going to tell me everything I'm going to make all this money. Well, an indicator, it only takes the price, open, low, high, and close, and manipulates that data to give you some type of line someplace. Okay. It's all after the fact. It
Okay.
doesn't predict. And if I change the settings, because indicators have settings on them, I can change the settings and I can tell me a totally different thing.
Yeah.
So I'm never wrapped up in indicators.
Okay.
There as a backup primarily. Again,
Okay.
the system is designed, the entire system is designed to keep you out of as many bad trades as possible. Not to
Mhm.
get you into good trades, but to how to keep you out of the bad trades. So let's slide your chart over to the top of this trend.
Yeah, I would say that I probably have been pretty wrapped up in the indicators.
Most everybody does. It's just the nature of the beast. Not a big deal. Okay, that's a good spot right there. Okay, let's get your data window and slide that down a little bit. Okay, now we always start, no matter what happens, at the swing high. So you've got one identified there.
Yeah.
Excellent. Now we wait for crossover. When a crossover occurs, then okay, now we'll look at the chart. You look at the chart, and the closest swing high was 3-4 days ago. This is not bad. It's okay.
Mhm.
Um, when I developed this, again, it took me 10 years. And it was a trade-off. Whenever you're doing indicators, there's always a trade-off. And I could have it, I can change the settings and almost have this exactly where the swing high was, almost. But in doing that, that's no different than having all the prices there. You can't see a damn thing. You can't make anything of it.
Mhm.
It was a trade-off. And after 10 years, this is the trade-off that I made. And the crossover with these 2 moving averages comes pretty close to the swing high and swing low most of the time. Sometimes within a day or 2. That's great. Okay. Other times it's 3 or 4 days away. Okay. Which isn't thrilling, but that's okay. So here you go. Crossover. 2 out of 3 in your direction? No. Okay. You wait until next day. There's a chart. 2 out of 3 in your direction going down? Nope. Next day, 2 out of 3 in your direction. Well, that's a doji, so we never take that as entry. Okay. If it's a second bar, though, or the third bar, we'll count it.
Okay.
Either white or black, it doesn't matter. But it's just not an entry bar.
Yeah.
So here you are, and that's your entry right there. Okay, which makes you 1, 2, 3, 4, 5, 6 days out from the swing high.
Mhm.
Now, you've already seen lots of discussions about 3 to 5, 5 to 7, 7 to 10.
Right.
Okay. Here we're already out 6 bars. Okay. So do we take a short trade on here? The support area is a little bit further down, keep coming down a little bit more, a little higher up, more, 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 right there, stop. Okay. Now, if you go over to the right-hand side of the screen, or left-hand side of the screen, I'm sorry, you've got a white and a black candle there.
Yeah.
Get that one. and come over another 4 or 5 bars to your right. Keep going, more. That one and the following one. Okay, the bodies of those. That's pretty much a support area.
Okay.
I would consider that a support area.
Okay.
Now, you go back to your setup bar. Right there. And the price target is still above the support areas. Right?
Okay. Yeah.
So that's a good trade.
Okay.
That's what I would be looking for right
Hmm.
offhand. Okay. We put that trade on, and lo and behold, it got filled because the following day, move over one line. That's it. Okay. That got into your entry price, which was the close of the preceding day. So it got into the price
Hmm.
and it hit the price target the same day. That was good.
Yeah.
Now, do we take a consecutive trade from there? Because most of the time we take a consecutive trade. And now we're looking at this and we're already almost 7 bars out from the swing high. Is that about right?
Yeah.
Okay. And the price target is way down there. And the closest support area is pretty much right there. Okay. You got a white bar and a black bar, 4 or 5 bars in from the right, from the left, I'm sorry.
Hmm.
Okay. There's 2 bars, that one and that one and the preceding one.
Yeah.
One more bar to the left. One more bar to the left, the black bar.
Black bar. Yeah.
The black bar and the white bar. That's pretty much on top of those things. I consider your support area.
Okay.
Price target that we're looking at for that consecutive trade now, go back to that bar, is pretty much right there.
Hmm.
Come up to the price target.
Yeah.
Slide it up a little bit to the price target.
Yeah.
Okay. And it's pretty much there. That's a little shaky in combination with the fact that we're 7 bars out. So we would not take that trade
Okay.
if they were live trading. If we're forward testing, we're not take this. And a back test, we take that and find out what happened.
Hmm.
And we find out that 1, 2, 3, 4, 5. 1, keep going, 2, 3, 4. Okay, 4 bars. Didn't hit our profit target, didn't get stopped out, but that's not enough movement in my direction. I'm getting out the next day.
Okay.
So I get out the next day. Probably at some type of a loss, it looks like. Not a dramatic loss, but you lost some money there.
Yeah.
Okay. But it could have been a whole lot worse. You find out that lo and behold, if you stayed another day, you would hit your profit target. But we never stay past 4 days. That's
Hmm.
hard. Okay, that's a hard rule. In
Yeah.
the meantime, what happened was there's another crossover 3 days before.
Yeah.
Okay. Next one over to the left. You're spinning top there. That's your crossover right there. Now, what happened was you go from your first swing high is 1, 2, 3, 4, 5, 6, 7 bars, 8 bars, 7 bars. Here you go. And you get sideways action.
Yeah.
You see it there now?
Yeah.
See 4 days of sideways action
Hmm.
before something happens. That's why 3 to 5, 7 to 10. Okay. I don't know what's going to happen. Something's going to happen generally. It's not enough to trade from, but it's enough to try and keep you out of a trade and a reason they'll be looking. Other people play Fibonacci games. Okay. They try and trade from that. And you can't because there's nothing accurate to trade from. It's an area. They do it with price and they do it with time both. And it's an area. And when the two overlap, you still get an area. You can't get a clean, price entry or exit price. So something's going to happen, and it's a good reason to stay out of a trade or to be waiting to get out of a trade. Here you got a crossover. That was a doji. Okay. You look at the next bar. Okay. 2 out of 3 in your direction. Yes, they are. You put that trade on, and lo and behold, you get hit a day out.
Yeah.
Okay. Slide over one more bar. Right there. Now you look at that bar. Is that consecutive trade? Yes, it is. You put the trade on. Yes. When did it get hit? Another day and a half out.
Yeah.
Keep going. Next day. That's the day it got hit.
Mm-hmm.
Now, we take 2 trades. We never take a third trade. And if we did take a third trade, you would see what happened. If we took the third trade on that, okay, you would have got stopped out.
Yeah.
Okay, you would have stopped out the next day with that white candle.
Yeah.
And that's the idea. That's why the system is so clean and easy to use. You can see the price targets. You can see the stops. You can just visually look at this and see what happened. You can jot down all the numbers if you'd like to. That's not a problem. It's a good thing to do. But after a while, you can just eyeball this thing and say, oh, yeah, I know what the system is. I know what the steps are. I know what the profit target is. Did it get hit or not? Oh, no, it did. Or yes, it did. Or I got stopped out. You would get stopped out on that one, most likely.
Mm-hmm.
That bar. Now, why else would you have been stopped out? Look how far you are from the swing high or swing low. Okay. However, it's starting to be a trend here. This is starting to look interesting. Notice what happened with your trend lines. In the trend, the preceding 5 bars from the white, from that bar, next black bar, 1, 2, 3, 4, down to the left, to the right. I'm sorry. 1,
Right. 2, 3, 4.
2, 3, 4. Look at the position of the moving averages. Those lines are almost parallel.
Yeah.
What happened the next bar? It starts to open up. Now, this is sort of an advanced thing. On a $5,000 account, you're not going to trade this because it's shaky.
Yeah.
But once you build your account up and you've got some confidence and you get the experience behind you, then you say, oh, yeah, that's opening up. I'm not going to take that, but it's opening up. Now what happens? Okay, do I have a trend here? Well, it's going sideways for a little while. I got a downward trend, and I had 3 or 4 bars sideways now, and I had a good trend before. Maybe this is going to continue. Do I put a trade on? You look at the next bar, 2 out of 3 in your direction. Yeah, I'll put a trade on. I'll get a bite out of the middle of the trend. No sense in leaving it there for no reason. And you get hit the next day.
Mm-hmm.
Okay, do I get a consecutive trade there? Yeah, I'll take a consecutive trade there. Does it get hit immediately? No, gets hit 3 days out. But I'm not stopped out. That spinning top there, go to spinning top. What's the high on that? Is 134.30. What's the stop on the setup bar? I'm back to the left, to the right, I'm sorry.
To the right.
Right, left, I'm sorry.
That one.
Next one is the setup bar. The high on there is prop
135.04.
135. Target, buy stop, sell stop. Sell stop is 135.07. Okay, so the sell stop is 135.07. Did that spinning top hit that sell stop or not? I don't think that it did. Awful close. No, it didn't. 134. So we didn't get stopped out either. You see what happened there?
Yeah.
The high at 134, but the sell stop was 135. So you got a consecutive trade there. You hit the profit target. consecutive trade. He had to wait for it though. And then what looks is happening again. 1, 2, 3, 4, 5, and then he had 3 or 4 sideways bars.
Yeah.
It always works that way in a trend. So you just wait for it now. Okay, because you know you're gonna have 3 or 4 sideways bars. And do you take that one? Yes, no, I'm in no rush at this point in time. I'll wait for the next one. The next one's sort of a spinning top, and they're shaky at this point in time. Okay, next one over. Is it doji? No. Next one over. That looks okay. I'm a little bit further out than I'd like, but this is still okay. Put that trade on, and it gets in and out the next day. Right?
Yep. Yep.
Reassess that day. Put that trade on. 2 out of 3 in a direction. Yes. Okay. Profit target, however, is hit 2 days out. Right there.
Yeah.
That's a lot of bites out of that, isn't it?
Yeah, it is.
Oh, yeah. For 20 minutes a day. And honestly, we got started on this call at 12 o'clock. We had a little delay on there. And here we are, 25 minutes out. And we did 1, 2, 3, 4, 5, 6 trades, 7 trades.
Yeah.
8 trades, all with profit. So it doesn't take very long to do this. And the thing is, once you have a couple of trades behind you, your account value builds. So now you have more money you can risk.
Yeah.
And I get bad on this because I've been doing this for such a long period of time. Your initial trades, when you get started, you're only risking between $100, $200, $300 maybe, which isn't a lot.
Yeah.
Which means you simply can't take some trades. You don't adjust the prices. You don't adjust the price target or the stop loss. If there's a good trade there and the risk is too much, you just don't take the trade. And you wait until you find one that the risk is within your tolerance area. Then you take that trade. So you could bypass a few good trades.
Yeah.
But after you build up your account a little bit, you don't worry about the money at all. It's always great when you don't have to worry about the money at all. The first place is in your trading account. Once you don't have to worry about the money at all in your trading account, that's a good indication that you're on the way. After 6 months to a year of not worrying about money in the trading account, you got so much money in your trading account, you're not worried about money outside of your trading account now.
Yeah.
And that's the whole thing. How do we get to that point? We get to that point by doing these things. It's the same process over and over. Did this process change?
No.
Did you learn anything new?
Actually, I did. Yeah.
Okay, it's the same thing though. Same process over and over from 2008 to today. The process has not changed.
Yeah.
Okay, it's an amazing thing. I get traders that, I let a few in every now and then, and they tell me, oh yeah, well, the system work I had before, it worked for about a year or so, then it didn't work anymore. And they told me that because the market changed. If the market changed and your system didn't work, how good was your system?
Yeah.
This system hasn't changed from 2008. Triple digit returns every year from 2008 to today. Now, before you got started, if I told you I had triple digit returns, would you even bother to talk to me?
I probably would have thought it's too good to be true.
Yeah, this is bullshit. Who the hell's this guy? But now you're in the system. Do you see how triple digit returns are no real big deal?
Yeah.
I mean, in all reality, if you're not getting triple digit returns, there's no way you're going to retire.
Yeah.
It's not possible.
Yeah.
If you get 100% return on your money, who the hell cares? It's not enough.
Yeah.
Triple digit returns under your control. You have to sleep really well. And it's a whole different game plan now.
Yeah.
Partly because they are under your control. So you sleep really well.
Mm-hmm.
Now, there are people I talk to, and well, how much money do you have in your retirement account now? Well, about 150. I thought, what did you have last December? About 250. You lost $100,000 by listening to the professionals.
Yeah.
No, I'm not telling somebody to take all their money here. I'm telling somebody take 5,000, not a dime more than 10, and do this system. You're in there for a maximum of 4 days. You're only risking between 2 to 5% of your account. Who's more conservative?
Yeah.
Yeah, it drives financial planners crazy because you say the word commodity and they go crazy. They don't know anything about it. They
Hmm.
just know, well, commodity, that's risky. Somebody just lost $100,000. Listen to your advice. Put money in a 401k plan. So for a long year and they lost $100,000. Here, no big deal. Well, I'm talking five, maybe $10,000 tops. After they get the job skills, after we constantly review the job skills, after they've tested the job skills themselves, after they went and forward tested them in real time.
Yeah.
There's very little risk in the system. That's why there's so much testing time. I'm in no rush. Everybody else wants you to go out there and trade. No, bullshit. Okay. I want you to make sure you've got the skills first. You know you've got the skills. You've tested them yourself. You've proved to yourself, oh, yeah, if I do these things, I'm going to make that kind of money. There's absolutely no question about it.
Yeah.
Okay. So that's how you take the middle part of a trend.
Okay.
They happen occasionally, once, maybe twice a year. It doesn't happen a lot. But when it happens, why am I going to sit it out for no reason? Now
Hmm.
you know how to take it. Always start from the swing high, 3 to 5, 5 to 7, 7 to 10. Count the bars. Something happens, and they're going to go sideways. Sometimes it's only 3 bars. Sometimes 5. Depends on the commodity. And you see what happens. Depends on the commodity and the time of year. Whatever happens. Okay, it doesn't necessarily happen the same time of year all the time. Excuse me, I still got this strange cough thing here. Going on for a month now, but my voice is halfway better. It's taken 3 weeks now. Uh, but this happens all the time. Always look for your swing high and swing low. Where's the crossover at? Get the crossover. Where's the swing high and swing low? And start counting bars. From 2008 to today, it hasn't changed. Yields the same result all the time. Now we've been on this call for close to a half an hour, and I still haven't talked about the ADX yet.
Yeah.
How about that?
Yeah.
They're there, okay, as a reason to avoid a trade. More things to pat you on the head makes you feel better.
Yeah.
But all the action is with the price chart, not the indicators.
Yeah. Actually, that's another reason I didn't take some of these was I noticed the ADX was down below 22, and I was a little concerned about taking the trade because of that. But
But it's a back test. You can't get
yeah.
hurt.
Yeah.
That's why we do the back testing. I want you to put all the trades on. I don't
Yeah.
care what they look like. You put them all on. 2 out of 3 in your direction. You put the trade on. You put a consecutive trade on. Okay. And then you look at them after why. Why was it good? Why was it bad? Primarily, why was it bad?
Hmm.
And most of why it was bad, you're going to find are the same things. Most of your bad trades are all for the same reason. Too far from swing high or swing low. The
Hmm.
profit target was at a supported resistance area, at or beyond a supported resistance area.
Hmm. Yeah.
Once you understand those real basic things, there's only 2 or 3 bad things that can happen. Okay, why they happened, they jump out at you after a while. When's the last time you started driving, you missed a stop sign? You didn't see it at all.
Yeah. I can't remember when I did that last.
I mean, it could happen,
Yeah.
but you've been driving for such a long period of time to see a stop sign is no big deal.
Yep.
It comes second nature. You just out of periphery, you just catch it.
Yep. It's automatic.
After a while, you'll do the same thing with your charts. I wish there was something fancy I could show you, but they're the same basic things over and over again. It's just the practice of doing them.
Yep. Hmm.
So is that good for now?
Yeah, that's definitely helpful. I have a much clearer understanding now of at least of that long trend like that, how you can look at it and determine where to get in and out, and how that it keeps repeating itself with the short downward trend and then sideways and then down again and sideways. And
Yeah, it's an amazing thing.
yeah.
So for your homework, let's go back to January and
Okay.
do January and February
Okay.
of corn and the bonds and see what happens. Okay. Understand when you're starting at January, you're actually going to have your chart into December. So you can
Right.
see what will happen beforehand.
Yeah.
Otherwise, you're going to go crazy. You can't start at January 1 because you get no background on the other side. You need the other side.
Yeah.
All right.
Okay.
Is that good for now?
Yep. That's great.
So do that and then reschedule. And what's going to happen is hopefully the next half hour to an hour or so, you'll get a recording of this call. You'll get an email with a recording of this call, not only for you to schedule your next call. Okay.
Okay. Perfect.
Very good.
Great. I
All right.
appreciate it,
Bye now.
Dr. Brett. Thank you. Bye.
Bye now.